Hey guys, welcome back for another YouTube video, all in crypto here, and this is going to be your daily cryptocurrency market update. I'm currently traveling, as I'm sure you guys can see the unfamiliar background. So I'm really going to keep this one short and sweet. And right now for me, my main focus in trying to understand where the cryptocurrency market is going, and it should be your main focus as well, is looking towards the CPI print on the 14th of this month to give markets that direction. Either the adjustments that we've seen from February the 14th, from February, the start of February, where we've seen the dollar gain strength, we've seen yields climb, we've seen risk sell off, gets confirmed, and that markets need to readjust because inflation is going to be hotter for longer, and we're going to have the Fed that's going to be more aggressive for a longer period of time, or we see a relapsing of that readjustment with a slightly lower CPI print. So it's all about March, forgive me guys, the 14th. Because the last print that we had wasn't very decisive. We said this isn't great news because it kind of shows that inflation's stubborn. I think actually the Fed's Kashkari summed it up brilliantly. So this is the Fed's Kashkari says he is now leaning towards continuing to push up his policy path versus December's view of 5.4%. In early February, he said he is not changing his dot plot view, but since then, so since February, this is the most important thing you guys got to understand, because everything right now, the bond market, the yield market, the dollar, the FX market, the stock market, the commodities market, the crypto market is all correlated to economic policies and what's driving those economic policies, which is inflation. You understand that, you'll understand the game, and you'll do well as an investor. And you guys will know that we took a punt back into the market on the 1st of February. At the start of January. And we still are spot long from January until there's reason for us not to be. And we'll talk about that. I do want to look at Bitcoin, drop down some time frames. Like I say, I'm going to keep this short and sweet. But to continue with this, in early February, he said he is not changing his dot plot view. But since then, CPI, PPI, PCE, retail sales, and flash PMIs have all come in on the hot side. You've seen since the start of February, I don't think I've got a chart of it here. Well, this kind of sums it up. Traders are starting to put big money on the Fed going to 6%. So at the start of February, rates weren't priced much above 5% for the Fed's fund, and that's where they were going. And this ties in with the 2-year yields, so on and so forth. Since then, with the inflationary data, you've now got rates nearly going to 6%. So you've gained nearly a point in rate hikes. And ultimately, this is going to depend, this readjustment that's adjusted on hot inflation. If you get cool inflation, you will see that, a readjustment of the adjustment. And markets will love that. And you'll see the dollar gain weakness. You'll see the yields come down, which is what you need to be looking at as the other side of the story to what's going on with your crypto investments. You cannot just be a crypto investor and just watch the charts. I have spent, at this point, tens of thousands learning how to trade, learning how to do technical analysis and chart. There's no perfect method. Some are very close to perfect, and we think we found one of them. But ultimately, even within these theses and these ways to trade, ways to invest, one of the main things that you need to be paying attention of is the macro, because the macro can very easily come in and spoil your pattern, to say the least. So we'll see what happens here. Ultimately, it's all about readjusting. It's all about inflation. It's all about, the monetary policy that goes with that inflation. My personal opinion is, even if we get a hotter inflation, the Fed will still stick with 2.5 basis points. That would be great. 25 bips, which is 0.25%. Instead of the 50, I think there's about a 30% chance of a 50 on the 22nd of March this month, so after the CPI. But it's all about looking towards this CPI. Markets are looking for it. They are naturally going to lean towards downside when you're in this kind of no man's land and you're waiting for data because of the fear out there. Market goes up and down just on buyers and sellers on that day. That is it. There's no sort of complexity to it. People still don't understand actually how markets work. We are going to do a full video and have a great speaker coming on to actually talk to us about the inner workings of markets, because I think that educational content will really help people out. And actually, this channel is all about trying to educate people. We've had some great guests on. We've got more great guests coming on to talk about crypto and finance in general. You know, the sort of macro, the micro. You know, we're really going to get aggressive with our sort of educational content on this channel. But this is the current structure that we have in play for Bitcoin. Now, before we even had any of this bad macroeconomic data, so here we were looking at this as a potential neckline. So you'd have something like that. But now, and we did say this was very much a possibility, and this was the danger for us. We said, okay, well, if this isn't your right shoulder, and remember, we bought just before that last CPI print, which was a good result. We said, if this isn't your right shoulder, then you're yet to form it. And this is the danger. And we said that up here. We said, this is your first level. This is your second level to look at using the fibs. We interacted with the 0786. And now we may be looking for the 0618. This is still a healthy correction until it isn't. And what do I mean by that? Well, when you correct more of the move that you've made, so when you retrace more of the advancement, well, you've got a pretty good bet that you're going to go lower from that point. But until we get there, the trade's in play. I'm still spot long from the start of January. If anybody wants to find out about what I'm doing, where I'm doing, get the calls first, get the altcoins that I'm looking at. We've got 100Xs that have done very well. You know, feel free to join the Patreon. There's a link in the description. It's really going to take you to that next level in regards to your crypto investment journey. You also get all my early releases. So you get videos weeks before they even hit YouTube with project founders, all this stuff. If it's not for you, you can always cancel within a month. But enough sort of shameless shilling. This is really what we're looking at. And where does this play out? Now, it's kind of plausible that you're going to run to the 0618. Again, we're waiting for this data to come out. You are largely in this kind of no man's land, and markets are going to lead towards fear. You've had a great run. It's natural you're going to retrace a part of it. And, you know, we'll see what happens. Do we get good data that pushes this market up and sends it above that 25k range, comes back to test it, and then we fully send it? You are going to get through this little chunk of price data here and get to that 30k range so fast if you get confirmation to the upside. And if you get confirmation to downtime, then we will deal with it. But altcoins, if I'm being quite honest, look weak right now. Crypto, I think, is going to lean towards the downside. Could put in that lower leg, consolidate before upside, or just could go sideways, literally, which is what it's doing. If you look at an hourly chart here, you can see this is just sideways. I'm actually sure I drew something like this similar for my Patreon. There's not a lot going on here. It doesn't look amazing, but isn't, you know, I'd almost prefer that it was kind of doing something like this and popped out rather than just this sideways, we're waiting for CPI, which is basically what's going on. So with the CPI print and with the rate hike, I think they're going to do a 25 basis points. I think the reason being is because they're running out of runway. We're seeing the effects of high interest rates already. Certainly in the housing market, which has become deflationary very, very quickly. This is very interesting. This is bankruptcies in Europe are going through the roof. How much longer can the ECB continue to raise rates? So the central banks are between high inflation, which is destructive and damaging, or imploding the very system that they operate. I think they're going to choose the higher inflation because both of these roads lead to high inflation. So not fighting it leads to high inflation, and fighting it leads to high inflation. You're going to go, what the hell do you mean all in crypto? Well, they'll get to a point where they'll have to start bailing people out again. And this is the whole reason why crypto came about in 2008 in the first place. It's a very interesting time to be alive. I'm so stoked to be on this journey with all you guys. There's never a dull moment, certainly within the crypto space. And you've got all this macro sort of jargon going on. Crypto, the best way I can describe Bitcoin right now is it's a tired mule. It needs a break. It's taking that break. Let's see if it gets up and carries that sack of whatever up the mountain or climbs a wall of worry. You've got all this going on for crypto, and you've also got, I think I took the tab off actually, a regulatory crusade going on from the SEC, which actually has very bullish undertones. It's my opinion that regulations are needed. Once you get those regulations, this industry goes from $1 trillion to the tens of trillions. However, the attack that I've seen on Binance very much makes me think that the regulators are doing the dirty work for the institutions and trying to get rid of the competition. Competition is sin. It's a bad thing for these guys. And ultimately, they're going to, clear the path, I think. And CZ has a massive target on his back right now, and a lot of the allegations that Elizabeth Warren and all these people have thrown against CZ don't seem to have much weight to them. I mean, they reckon he's money laundered to illicit players, criminals, around $10 billion. That's a serious claim to be making. Yet they don't actually have any evidence for that. They just think they do, and they're throwing that allegation off. And in the letter, they were citing articles. I mean, it's crazy. So this is really what's going on in the macro. We'll see what happens. You've got the ECB haven't even started reducing bond portfolio yet. I don't think they will, because yields are already at this high point, and that will add to that and add to the whole sort of dampening. So it's all about the data that we're getting moving forwards. Looking at this pattern, looking at the right shoulder, is it still valid? Is it not valid? You know where your invalidation points are. You retrace back to the 0.382. You're likely going to retrace the majority of move. I wouldn't really like to see the 50 ran, to be honest. And the 50 is at 20,300. I wouldn't like to see that ran, personally. You do have till here, and then it's likely you're retracing the whole move and you've taken out this left shoulder. Then we can say, okay, we need to look for something else. We need to look for another pattern that may be probable. Right now, we're sticking with this. We're going to take advantage of this pullback and ultimately see where we can get to the upside. But yeah, until we get this data, markets are going to be in this kind of no man's land. It's going to be interesting. This was just a really short and sweet one. All I've got for you in this video, guys. If you enjoyed the content, like, I would appreciate it. So as a comment, I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.